You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it. You got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Boot Camp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, your Options Boot Camp drill instructors, Mark Longo and Dan Passarelli, will break it all down for you. If you trade options, you've got to ask yourself, why would you choose an options trading platform that puts investors first? At public.com, there are no commissions or per contract fees. And more importantly, it's the only platform where you can earn a rebate on every single contract traded. That means you can save on your options trading costs and keep more of your capital in play. Whenever you trade options on Public, your savings are automatically applied. So, don't change your strategy, change your platform, and see the difference in your bottom line. No commissions, no per contract fees. And it's the only options trading platform where you can earn a rebate on every contract traded. To learn more, please visit public.com/optionsbootcamp. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. Fall in boot. It's time to get into peak options trading shape. It's time for Options Boot Camp.
All right, everybody, let's light this candle. Episode 2 of our Options Boot Camp doubleheader. If you're listening on demand, this is just next week's episode. Welcome. My name, of course, Mark Longo from theoptionsinsider.com. And I hope you're having a good post-holiday trading week out there. Welcome to all our folks in the live who are joining us out there today, who are listening to this episode live as we do it. Don't have to wait 2 weeks. If you want to join them in the live, they're a good bunch. Theoptionsinsider.com/pro is the place to go to learn more. And of course, while you're checking things out, keep supporting the show that's been supporting you on the options front for over a decade. Check out our sponsors, public.com/optionsbootcamp. Really easy URL. All you got to do is go there, and they know you're coming from our show. And guess what? That helps to support the show that's been coming at you for over a decade now. Maybe while you're there, you kick the tires and light the fires on a rebate. Not the worst thing in the world to get paid to trade options. Public.com/optionsbootcamp. And a guy who's always getting paid to trade options is none other than the black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring. Mr. P, welcome back to the show. How much you getting paid today, sir?
Oh, I'm earning my keep today here, Mark. Busy with lots and lots of things. I could use a raise today, I feel like, you know?
Well, you know who else is busy, Mr. Dan? It's our listeners. They are coming at us left, right, and center. They demand answers, Dan. So to the mailbag we go.
Mail call. Time to look at questions submitted by our listeners.
All right, let's get at it, listeners. First off, this one just brought a smile to my face. This was actually on our show on Monday, the option block, which, Dan, you may want to cover your ears because it involves your beloved Uncle Mike. We were debating on that show, what is the worst sequel of all time. Andrew and I came down on Highlander 2, terrible film. In fact, Highlander was the theme of our episode. But we put it out to our audience. We said quite simply, as a flash poll we did that was kind of a fun one. Is Highlander 2 the worst sequel of all time, excuse me? And our audience was actually evenly split, yes and no, in our brief little flash poll here, 50% each. I bring it up, Dan, because one of our longtime listeners of the show, Mr. Diver SK, chimed in and says, I actually liked it. So I guess that makes me weird. You know, Dan, I'm not one to judge our listeners, especially longtime ones who sent in great questions, but I am going to judge here. Yes, that does make you weird, Diver SK. I'm not sure if I could read your questions anymore. I look at you differently now as a person. But you know what, Dan, I will overlook that. It's kind of coming into the holiday season. I will be charitable. So Diver SK actually sent in real questions as well. You may remember that handle, Dan, because he's the one who posted about a year ago saying he was inspired by our conversation on the wheel. I believe we had Matt Amberson on. We were talking about wheeling in using short puts and then wheeling out using a 70 delta call. So a bit of a meteor call. And he wrote in back then to say, you know, I like this. I'm starting a new strategy that I heard on the Options Bootcamp podcast discussing the wheel, because I have a ton of shares in AMC that I'm sitting on. I still want to play, so I am now selling weekly at the money puts. He's at the time the stock was $6. He just closed it today and opened next week. When I'm assigned, I will sell the 70 delta in the money call, and let's see what happens. And Dan, he's been filling us in on a regular basis throughout the year on how this strategy has unfolded. He's actually made some tweaks to it, I believe. But Dan, he sent in his final update for the year. Are you ready?
Yeah.
All right. He said his final update with the stock down to $4.50. The short put he rolled to December 27th. His roll premium for the year now, Dan, is $22.11 credit versus $17.62 debit. He got 70% roll yield, he says, with a risk basis of $600. That was his original risk basis. December of last year, December 2023 to the end of December this coming year. He just sold the last options for now. So that works out after costs with $600. He has a $423.93 he's got, Dan, after cost. So there you go. He made money, Dan. What do you think?
Wait, is he trading E-Trade stock or he's trading through E-Trade?
He did. I'm pretty sure he's trading through E-Trade because he said he has hashtag AMC still here. You're right. That threw me off at first, too. I was wait, did he switch it to E-Trade? But I know he's been doing a couple of these. But yeah, so at net, Dan, a 70% roll yield, not the worst thing, sir. What do you think?
Yeah, I mean, hey, made $423.93 after cost net. That's good. I hope it's not your only job. Otherwise, you might need a new cardboard box by mid-December here. But that's pretty darn good for one of these trades, my friend. I like it. I love it. Great job.
Yeah, I'm looking at AMC right now. It's $4.90. So if he had just held the stock, he'd be out $1.10. So it's better than that. Yeah. He managed to make money on a year when the stock's had some fits and starts along the way. Let's see. It got up to early last year, got up to $7.50, Dan. And then it sold off to $247, actually $238. My goodness. They came for AMC, sir. So he survived all that, and he made about nearly $500 to boot, Dan. So not the worst thing for just a little experiment he did here with the wheel, listener. So if you've been intrigued, I know a lot of people, when we talked about the wheel last year, were kind of jazzed about it, and they wanted to experiment. There you go. There's a real world practical example of one of your fellow listeners doing it and doing it well, listener. So Diver SK, I'm glad the wheel worked for you. I'm still going to judge you harshly for your love of Highlander 2. It's the worst, man. But you know what? I maybe can forgive you a little bit for your love of the wheel. All right, let's keep going. Dan, you have any of your students like that whose judgment you have to question inherently, but also you kind of like them, so you let them slide, Dan? Got any students like that?
I have time to time. Typically the ones that keep in touch and are active members of the community. They put their nose to the grindstone. They get it dialed in. So, but I have had time to time folks like that. Yep.
All right, listeners, let's keep rolling. Let's go out to Mr. or maybe Mrs. Slicks with a Z. And they want to know, how early do we typically start seeing volatility coming out of the options prior to a holiday? Well, that's a great question. Very timely one. We are recording this the day before a holiday here. Mr. or Mrs. Slicks? You know, the answer to that one is kind of subjective. It really depends on the week, what we have going on that week, what's going on immediately preceding that event. Let's say, for example, we're heading into a traditional long 3-day holiday weekend. So we're heading into that Friday. And, you know, usually, you know, if everything else is quiet, we're hanging out in the middle of summer, nothing's going on, you might see that vol start coming out on Thursday even. Maybe, certainly by Friday morning, you're going to start seeing it coming out. Usually when I was back on the floor, you might start seeing it, if it's really quiet, coming out late Wednesday. People just didn't want to carry positions. That to me was a little crazy. People were hitting the exits even then. They didn't want to carry the theta through the long weekend. They were getting the hell out of Dodge. So what happened then was things actually could get oversold. You could have maybe a little bit of a cheap free weekend you could buy heading into that long weekend. These days, the 0 day and stuff, things tend to perform a little bit differently. Also, it depends what's going on that day. Like we have a holiday we're going into. Let's say we have non-farms that Friday morning, right? Guess what? Vol's not going anywhere until at least non-farms is done that morning. So in that sense, it's going to perform more like a traditional holiday weekend. They're going to wait till the actual event in the morning is done. And then barring some sort of surprise, we're going to see that vol start coming out, let's say in the second half of the session, more along the lines of what you expect. So unfortunately, Slick, there really is no, or I should say Slicks with a Z, there really is no hard and fast rule. 2.5 days, Dan. I wish it was that easy. 2.5 days, bam, start hitting your theta, Dan. What do you think?
Yeah, it would be nice and easy seeing that. I just did one of our, did I do one of our daily videos on this? I think I did, or maybe I talked about it in a class, but yeah, like you can ironically, like you wouldn't think this, but you can look at the VIX and see some of this information because like, you know, the VIX is a formula, like it's numbers in a computer. And so when option prices get cheaper, that formula just infers, you know, like if the formula could talk, it just says, options are getting cheaper and implied volatility must be going down. But no, what's actually happening is market makers are reacting to order flow and taking the day out, and it's making the options look cheaper. So it makes it look like implied volatility is going down, but it's really just the day coming out. So, yep.
All right, good question. Slicks, let's go out to Annette. Or maybe Ann T. I'm going to go with Annette because why not? They say, hi, I have a question about setting up stop losses or trailing stops. I am in Hawaii, and with the time difference, it's hard to watch the market at the wee hours. Yeah, you know, I feel you. That must be hard, Ann. Regarding stop losses, trailing stops, etc. on spreads, do you use them? If so, how? For example, if I have a debit spread on XYZ with 15 days to expiration, how would I set up a stop on the short side? Since the underlying can move so much, is it better to ride it or not? Thanks so much. Oh, you guys are awesome. All right, back at you, Ann. You are awesome as well. Dan, our listeners are awesome. It's just an awesome bunch. But poor Ann, you got to hang out in Hawaii. Kind of hard to watch the market in the wee hours, Mr. Dan. That's got to be challenging. So they want to know, do we use stop losses on our spreads? And if so, how? Dan, or is it better to ride it out? Dan, are you a big stop loss guy? And how do you go about using them?
On spreads, I am not a real stop loss kind of fella. Maybe on SPY or something where it's just a penny wide, like a fraction of a percent wide, I'd consider using a stop on a spread, but generally not. You generally end up you're not going to middle the market. You're going to sell the bid or buy the offer. And it's like double wide because it's the bid ask spread on both options. So it's like double kind of. Geez, you know, I don't know. I would just, when you hear the roosters crow or the cats climbing in your window in Hawaii, time to get up, get out of bed. Actually, I think you probably have to get up before the roosters crow there. I know they crow pretty early over there. But geez, I don't know, man. There's some life trade-offs, and living in Hawaii, it's got to be tough to trade. I knew one guy who moved to Hawaii to trade, and he was telling me, oh yeah, I wake up at 2:00 in the morning. I'm like, screw that. So yeah, I don't know. I don't know if I should tell you to move from Hawaii or stop trading. It's kind of a lose-lose situation.
Leave paradise, but you have options. But you got to go to the frozen tundra of North Dakota, Dan. That is the only place. Or maybe the options mecca of Frankfurt. I hear good things.
Yeah.
Unicorns and whatnot. So this is an interesting one. I was trying to think right now in aggregate most of my trades. It depends also on your platform as well. Some platforms make working limits on your spreads a little easier than others. If you're using a more basic platform, getting your stop limit on a spread, a long debit spread in this example, may be a little bit more challenging as well. So I wish, kind of like the other question with Theta, I wish there was an exact, hey, here's the rule of thumb you should use, and it works in all scenarios. For myself, I find I don't really tend to use stops either, Dan, which is kind of interesting. Again, I don't have the same problem that Ann does here, or Annette, that, the large hours of the day are inaccessible to me. But yeah, in general, I tend to, because spreads are two moving parts. Let's say you're buying your typical vertical debit spread. You're going to buy one probably closer to the money, and then you're going to sell one farther out of the money. If you got to stop on the spread, they're going to give you some very funky midpoint. So even your reliability of getting executed on your stop limit on a favorable level is kind of hard. So I wish I could tell you, hey, stop limits will be the panacea to all your ills. Unfortunately, I don't think it will. And if you do get filled, it probably won't be at an opportune time. They're really going to wait until the markets line up at an extreme disadvantage for you and a benefit for them before they fill you on both legs of that limit, especially if you're in a less liquid names. Maybe if you can give us some more examples of, you have a particular name you're looking at and maybe what particular type of debit spread you're using, then maybe we could help you with that a little bit better there. A little more specifics will help you and T. But right now I'm kind of with Dan. I don't use a ton of stop limits, and partly because we're trading on a lot of different platforms, as you might imagine, we have to here to kind of stay abreast of all the latest brokerage developments. So it's different to implement them on every platform. So sometimes it's just too much of a pain. But also we tend to watch our positions and try to know when we want to get out of them. I do use, on the profit side, I will typically say, hey, okay, maybe I want to exit at this level. But the protective stop, I don't use a ton of those. And usually if I'm using those exit points, it's usually on trades in the vol space. It's particularly, let's say, VIX upside, VIX verticals, things like that, where I've said before many times, you're going to have a few hours, if not a few minutes, to really monetize those at maximum profit, because the moves in the vol space can be very short-lived. So in those markets, I've learned through bitter experience that if I don't have a order ready to go when the market's open to sell whatever it is, my spread at this level, if it gets up there, then, or maybe just some upside calls I have or puts, whatever the case may be, then usually you're going to miss the apex when you actually want to sell it. And by the time I'm actually watching the markets, might probably already come off quite a bit. So I have learned that through bitter experience. In the vol space, I will work levels to close a trade at, kind of like a maximum profit that I want to get out of this trade, but I don't really work a lot of stops. Maybe that's a worthwhile show to have, Dan, down the road, why we don't do stops.
Oh, yeah. Yeah, that could be interesting.
That could be interesting, because a lot of people might be surprised by that. They might just assume that we do all the time. Let's keep rolling. Let's go out to YouTube, Dan. We've got the creatively named Raju W6E90. Your favorite, Dan.
Okay.
I'm guessing Raju, English not his first language, because it says, your channel, very useful. Thank you so much. Small request, option premium indicator, please. So he wants us to build him an indicator, Dan. That's all. Nothing big. Just build a custom indicator just for Raju here. He doesn't say what he wants, what he wants it to indicate. Options trading is open. There's an indicator for you. Options markets are closed. Do you want it to sell? Do you want it to buy? I don't know, Raju, if we're going to build you a custom indicator, we kind of have to know a little more. But I appreciate you listening. A lot of you folks come in on YouTube, so we appreciate all you folks out there as well. But yeah, we need a little info, Raju, before we can build you your custom option premium indicator. All right, let's go out to this one. Machiavelli. I like this. I think this name sounds familiar. I think he's written in before, Dan. I remember a name like Machiavelli. That's a good one. He says, "Hi, Mark. Loving the shows as always. Oh, and I hope you are having a good start to the holidays." Well, right back at you, Machiavelli. Thanks for taking the time to write in. He says, "I was wondering if you and Dan or the guys on Vol Views could review sticky deltas / sticky strikes. Specifically, I was interested if the sticky delta model is more prominent around events like election vol or earnings, and how would you guys think about trading it? Thanks." You know what, Machiavelli, you have good timing. We did just do an episode about this. I need to go find where it is on our feed. I was just talking about this very recently, so I could point you to that. While I go look for that, Dan, what are your thoughts on sticky deltas? Are you a fan? Are you not a fan? If you can give an overview of what we're talking about here. And also, he wants to know specifically, do you find them to be more prominent around events, sir?
If you don't have an episode all on that, that is one thing that we can do. So what we're talking about here is if you look at like a graph of option skew, right? Basically what you tend to see on most stocks is what we call the sneer, where the put skew, the lower strikes, volatility gets successively higher, sometimes at an exponential rate even. And the call skew tends to like fall just a smidge, right? And so like, if you think about it, like the middle of it is where the market makers set their volatilities. And then they set a skew for the put to have like a slope to measure how much the implied volatility goes up for each, strike and down for each call strike. But like the middle of it is where they set their volatilities. So like the weird thing is, let's say the middle is 100 and the stock goes down to like 80, right? So now, like, if you're looking at the graph, you would think, okay, I'm looking at this, the same shaped graph, and I guess if the stock goes higher, or if the stock goes back up, this is kind of hard to describe without a visual aid here, but if the stock goes back up, I guess the vol is going to fall a lot, to get back to what was the middle point. But no, what happens is the middle moves. So you basically have either a sticky delta or a sticky strike. A sticky strike is when you say, like, if you're the market maker, hey, or upstairs delta neutral straddle trader too. Hey, I'm setting the 100 strike to be the strike that I base my skews off. That's the middle. That's where I say this is what the volatility is, and then all the other options that are higher or lower are just going to be a mathematical iteration of the skews. So that's a sticky strike, but a sticky delta is you're going to say, hey, you know what? Whatever the 50 delta is going to be where I set my volatility. So it kind of naturally moves with the stock price because whatever's the 50 delta option moves with the stock price, right? So that's the very, very fast definition, because this is a very, very long conversation. I think it's much more common for traders to pick one of them, sticky delta or sticky strike, and stay with it. And not necessarily change it because there's an event coming up. I think it's a lot more related to what I'm trading. Like, am I trading options that expire into oil futures, or am I trading Apple options? Now, all that said, it's been a long time since I even really had to think about this kind of stuff, but that's the gist of it. Yeah, I don't know. Mark, is there an episode out there?
You bought me some time, Dan. Thank you. I was able to track it down. I was driving me crazy. I know we just talked about this, and we did talk about it. It was myself and our buddy, Mr. Matt from Orats. We had this exact question, but it was on a pro Q&A, Dan. So you know what I'm going to do, Dan, because I'm feeling generous. Mr. Machiavelli, you've written in before. You've been a long-time listener. So in the spirit of the holiday season, Dan, I'm going to be generous. we're going to give you 3 months of the Pro Machiavelli. So you can go check out that episode that I did with Matt about sticky deltas, a Pro Q&A, and everything else we've got up there. 500 episodes, whatever's up there. You get access to everything just because we like you. You sent in such a great question. So keep an eye on your email, Machiavelli. Our producers will reach out to you, and you can check out that full, because we had almost the exact same question on a Pro Q&A. That's why those Pro Q&As are awesome. You should be checking them out. We get in deep into the weeds on some awesome stuff, including sticky deltas, listeners. All right. Let's go here. We're starting to come up against it here. Let's go out here to... We talked about this last, about the binaries. We're going to save this binary one. We're going to do a whole episode, I believe, about a binary. So Jose Josie, we'll come back to your question for a future episode all about binaries. That deserves its own episode. We got Ralph chiming in, Ralph Humphrey. He wrote in before. He had questions about ADV and some other stuff. And he just wants to say, hey, Mark, thanks for addressing my questions on the most recent episode. Ralph, well, you're welcome, Ralph. Thanks. Take the time to listen. Everyone else out there takes the time to listen. And, of course, send in your questions. We love you all out there. Let's go out to YouTube again. This is Global Dividend Strategy. So I wonder what they're up to, harvesting those divvies. They just wrote, what an exciting... this is on right after our election night special with Dan was on. Dan was on the election night special. He just wrote in to say, what an exciting time. Well, you are not wrong. It was a wild time heading into the election, coming out from the markets. And now, of course, as we're vacillating around a little bit, still an exciting time. Dan, have you fully recovered from the madness that was the election night special, sir?
Oh, goodness, yes. Lots of Xanax and alcohol, but I made it through it.
That's a good combo, Xanax and alcohol. I recommend that to all the kids out there. It's perfect. Good for what ails you. And then we've got Redetached chiming in also after our election night spectacular. He just wrote, we made it. And you know what we did? We made it. We made it through the election, and we made it to the end of the show. All right, Mr. Dan's going to do it for our double episode spectacular just today. Man, a lot of living being done just on this episode. Dan, we had sticky deltas and sticky strikes. We had stop losses and maybe why we don't use them out there. We had people requesting custom indicators. We had theta going into a holiday. We had the results of wheel strategies. Dan, we packed a lot of living into a half an hour, sir.
Holy cow, man. We sure did. That was, we talked about a lot.
Well, if folks want to talk about more, specifically with you, Dan, where should they go? What should they do?
Make your way on over to markettaker.com. Market like stock market, taker like take what is rightfully yours. 2 T's in a row. And we're all happy to help you out over there. We've got a really great community, really not a lot of nice folks there, just like you. You can join the chat room, chat with them, get trade ideas.
Just realized we got so busy with the listeners, we didn't even get a market taker question of the week this week. So we got to get 2 from you next week, Dan. What do you think?
Oh, okay, yeah, two next week. Absolutely.
The listeners hijacking the show. How dare they hijack the show with their own questions? Dan? Who do they think they are? Like we do this show for them or something. Speaking of checking things out online, listeners, head on over to our friends over there at Public. Public.com/options bootcamp. They're literally the reason the show keeps coming to you week after week. So give them a thanks. Just go to that URL. It's all you got to do. Public.com/options bootcamp. Maybe while you're there, you kick the tires and light the fires. Maybe you get paid to trade some options. Not the worst thing. And of course, if you want to check out what our pal Machiavelli is going to be checking out over there on the Pro, only one place to go to check that out. theoptionsinsider.com/pro is the place to go to learn more. Those Pro Q&As worth the price of admission in and of themselves, let alone oddities and the early access to stuff and the live streams. And of course, the awesome giveaways. Those, you win one of those, you're pretty much set as well. So a lot of great stuff. theoptionsinsider.com/pro, the place to go to learn more. That's going to do it for us on the old OBC today. We're recording this the day before Thanksgiving, so I hope you all have a great holiday out there. Don't get too gorged on turkey, just a little gorged. And remember, if your family drives you crazy, we've got 18 years of content on the network to soothe your pain, give you something to distract you with. So by all means, check it out. If you're not listening to the full network, yet another reason why you should be doing so. No shows, obviously, the rest of the week for us. OBC is going to conclude it. It is a holiday week. I'm not a monster making people come in. So we'll be back again on Monday for the option block all the way through to next Education Wednesday. Another episode of Options Bootcamp. Stay safe out there, everybody.
If you trade options, you've got to ask yourself, why would you choose an options trading platform that puts investors first? At public.com, there are no commissions or per contract fees. And more importantly, it's the only platform where you can earn a rebate on every single contract traded. That means you can save on your options trading costs and keep more of your capital in play. Whenever you trade options on Public, your savings are automatically applied. So, don't change your strategy, change your platform, and see the difference in your bottom line. No commissions, no per contract fees. And it's the only options trading platform where you can earn a rebate on every contract traded. To learn more, please visit public.com/optionsbootcamp. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.